lack of data. So only 40% of Filipino adults have a credit history. And second, there's no tech. You can't offer an API to, oh, I'm sorry. I'm getting a little bit of a audio feedback here. um, yeah. So companies like Firm don't yet work in emerging markets, right? So there's lack of data. Only 40% have a credit history, and there's no tech. You can't offer an API to even giant companies if they don't have the engineers to integrate APIs. So Plantina is making buy now, pay later work in emerging markets. We have data. We partner with merchants to offer their customers more purchasing power. And merchants don't need tech to sell on credit because we make it work with their legacy systems. So Plantina is a pay later service for emerging markets. We enable merchants to sell on credit to consumers with no credit history. And with Plantina, we're giving consumers convenient credit and in many cases, their first credit approval. So consumers can build their credit history by just by buying the goods that they like to buy at their favorite merchants. So my co-founder Earl and I, we met at Stanford Graduate School 14 years ago. I was in a machine learning PhD program. Earl's in business school. We met because we got all the Filipino graduate students together for regular dinners. It was just 5 of us, but we challenged each other, how can we serve the Philippines? And we still do. I had been a computer vision researcher at NASA Ames. When I left Stanford to lead data science for Bump Technologies, that app where you bump the phones together to exchange contact information. That app was downloaded 150 million times. Everyone was bumping photos. We pivoted into photos and Google acquired Bump to build Google Photos. I've always been passionate about driving better outcomes in the Philippines and emerging markets after having volunteered for the Filipino diaspora for over a decade. So I founded a team focused on emerging market credit at Google. Earl, since our Stanford days, has been a bit of a rock star of the Philippine startup ecosystem. He's done his master's of engineering at Cornell before his Stanford MBA. He became a VP of innovation at Smart Communications, one of the Philippines' largest telcos with over 70 million subscribers. And he also founded some of the Philippines' first startup incubators, led data partnerships at Bridgewater, and was managing director at Charles Schwab. We're also proud to have a rockstar cast of global leadership in emerging market fintech consumer lending. So Plantina creates new creditworthiness data. We're bringing more data science skills to emerging markets, which helps merchants turn their untapped loyalty program data into better sales. And because we're offering closed loop credit to their customers, then merchants are willing to co-market the Plantina app, which lowers our CAC. So the combination of mobile data, merchant transaction history, and user-reported data provides us with a data advantage, enabling us to build machine learning models predicting fraud risk, conversion rates, and repayment rates. Merchants don't need to worry about their technical readiness when Plantina can work with their legacy systems. So we set up key accounts and distribute loans on voucher codes so merchants don't need tech teams to sell on credit. And so it's been working. Since we've launched the product a year ago, growth is still fantastic. Just last month, we've celebrated over 100,000 downloads and our 120,000th download in the same month. And also month-on-month growth of monthly transacting users has been between 30 and 70% in the last few months, which we're excited about. So we're proud to have attained an average rating of 4.6 stars in the Google Play Store with a net promoter score of plus 77. So reviews are happy with how simple and fast it is to get credit. And in our first year of operations, we're proud to be offering a wide array of top national and international scale merchants, including the top merchants in each of these verticals shown here. And today, Plantina gives consumers credit with credit offers that are appropriate to their stage in life, and we're just getting started. So we consider credit to be our MVP. And in the future, we look forward to giving consumers even more financial services appropriate to their stage in life. And to date, we've raised $3.5 million from these following investors. Thanks to the support of all these investors, and also thanks for your time today. So please say hi at info@plantina.com. Thanks.
Awesome. Thank you so much, Kevin. And next we have Nick Sky of Change Ed. Welcome, Nick.
Thanks, Mona. Hi, everyone. My name is Nick Sky. I'm the co-founder and CEO of Changed. In 2018, we introduced a more fun and engaging way to pay off debt on Shark Tank, and we left with a deal from Mark Cuban. Change reinvents the way that debt is repaid, putting billions of dollars of interest back into consumer pockets. Our data science-driven approach leverages game mechanics that flip debt repayment from this disjointed negative experience into a positive and engaging one. But before we talk about how we do this, I'd like to share why we're building Changed. Meet Dan. He's my pretty good brother, but amazing co-founder. We're first-generation Americans who were raised by a single mother and use debt as a need as opposed to using it as a tool as it should be. Dan had a huge and painful problem when he graduated with over $70,000 in student loan debt. Like many people in his situation, he was stuck. He wanted to buy his first home, but he had to walk away from that dream because of his student loan debt. His cash flow was the issue. Student loan payments, credit cards, bills, life left no room for a mortgage payment. We realized that we weren't alone and identified the real problem. The problem with consumer debt in the US is that the repayment process is broken. Americans owe over $14.3 trillion in debt, where they're paying over $436 billion in interest costs every year. Debt affects Americans of all walks of life in a real way, but it affects people who don't have access to traditional banking and financial education tools even more. Underbanked Americans have a hard time borrowing and paying off their debt. Consumers who don't have access to financial education end up borrowing more, owing more, and missing their financial goals. This is a real problem that we all need to spend some time thinking about today. Even if everyone on this call doesn't have to deal with this problem, we all serve people who think about this every night as they fall asleep. Effectively paying off debt is stressful, difficult, and doesn't allow for a transparent process. We're changing that with Change, with tens of thousands of members paying down over $20 million in debt through the Change platform and are on track to be financially free sooner. This is how we think about debt and the repayment process, personally knowing it very well. At Change, what we're building is a positive debt repayment journey, and we've started with the $1.6 trillion student debt crisis and are building a journey for our members' next financial steps. This is what we do well to help consumers reach their goals sooner. Change is personalized, where Change provides intelligent recommendations driven by data science that create personalized debt repayment timelines for each unique user. Change is engaging, where Change engages members every 2 to 3 days with their debt. We do this by projecting savings, gamifying debt repayment in a way that has never been done before, and manufacturing instant gratification by showing instant ROI wins and small wins every day. And Change provides a level of transparency that doesn't exist in debt repayment today by aggregating multiple debts, moving real money and automating quick payments, allowing users to save at the desired pace without the traditional income, credit score, and spending habit discriminations. Truly anyone, no matter your situation, can use Change to pay down your debt more effectively. And we've proven this in the market so far and are making a huge impact. With over $2.3 billion in loans managed and $20 million in debt wiped out, we're helping people eliminate their debt. On top of that, Change reframes debt repayment from this disjointed negative experience into a positive, engaging one, with 91% of members saying that Change makes them feel better and in more control of their debt repayment. This is all great, and we're super proud of the team behind this, but let me show you a quick demo of how a member pays off their debt using Change. Welcome to the friendly Change dashboard. One of the first things that we see is how much money we're projected to save on our debt. $2,000. That's real money going back into our pockets. Change is also able to show the current balance of our linked loans and how much time we're saving on the repayment of that debt. Moving down the screen, we'll take a look at one of the savings features, the Change Boost. We can set a one-time boost or schedule them to be sent on a recurring basis. Here we can boost daily, weekly, or every other week or monthly. Let's set up a daily boost here. We're presented with a slider where we can choose how much we want to add to our savings on a regular basis. The coolest part is that we're able to give estimates on loan savings, making this an encouraging and positive experience. I'll boost $1 a day here. And great stuff. Now I'm passively saving in small amounts to get rid of my debt sooner, and we can adjust this at any time. Going back to our dashboard on our payment screen, I'll see a record of all of our payments that I've sent with Change, including the details on when it was sent and how much it saved me. I could tap into each payment to see how much that extra payment is saving me on my loan repayment. Moving to another great feature of Change is Spare Change Roundups. Here we can track our spending and see how much each purchase saves us on our debt. I can also tap and see granular details and see how much each payment is projected to save me. There's a ton more, but my time is up here today. Thank you so much for your time. Happy to answer any questions at our expo booth.
Awesome. Thank you so much, Nick of Change. That was wonderful. Next, we have Hetty of Cachet. Let me get Hetty up on stage. Hedy, take it away. Hedy, you're muted. There we go.
There we go. Sorry about that. So here we go again. I'm Hedy, CEO, co-founder of Cachet. 2 years ago, we launched first version of the Cachet with a goal to build an ecosystem of services to enable platform economy lifestyle. So 9 to 5 jobs were developed during Industrial Revolution. In some markets, Masters and Servants Act is still quite actual thing. This has served us well, but maybe it's time to look into how this is going to serve us going further. This structure of 9 to 5 was made to build a work-life balance, and it has given centuries to different structure into logics of millions and different services, even kindergarten working times. But year after year, companies have digitized themselves and built on much more efficient processes. You have all heard of 4 days work weeks and many others. So the model is slowly coming in becoming obsolete as more people choose to work remotely and flexibly. And companies are thinking through the processes in how to build more agility into the way of work. So we are on the road from full-time workers into a more hybrid version where full-time workers together with gig or contractual workers are normal part of the teams. And as we already can guess, there's going to be more people joining the team in the future. We already have a colleague called Alex as part of our team. This change is going faster than we think. Today, 2/3 of the UK millennial generation and younger has already worked via platforms. Soon, this gonna be the 75% of the workforce. They are not used to the way that sitting in office in one place, working fixed times. They like their freedom and they like to be flexible in what they do. Uber, TaskRabbit platforms are just a first taste of what's coming. Question is how we can make it more sustainable. Today, one of the key problems is that financial services like insurance is broken for the platform economy because it's made fully and is based on the 9 to 5 full work time and asset ownership. But this is not how platform economy works. COVID have even further accelerated it. Platform workers, is it then Uber drivers or Deliveroo couriers or many others, they multi-up. There is no such a thing as only, let's say, Uber driver. There is in US, normally they drive at least on Lyft and Uber, and in Europe, many more. However, during the pandemic, many, not many activities were going on, lots of them had to change from ride-hailing into courier or many others. But this is the beauty of the platform work, and it saved the income for very, very many people doing that. One of the key things why people like to work like that is to be free and be the master of their own time. But I keep stressing on the word sustainability because this is one of the key issues of today's platform economy. People like Uber drivers, during pandemia, many lost their jobs. They lost around 70 to 80% of the trips, and by that also their income. Lots of countries like UK or Italy, they jumped in and paid fixed citizen salaries to support them. And obviously via that understand that there is a problem and there's a need to regulate it a bit differently. So today, this topic is very hot on both European Commission level, in US, there's lots of discussions, and obviously on various different country levels, how to regulate the platform economy in order to make sure that there's a
1 minute.
Social benefits, tax are in place, and so on. I come from one of the most digitized countries, and I can say there is a other way to just make it full full employment. This is the offer. This is what we offer. There's one employee and there's multiple benefits coming from various different employers, being equally distributed or being proportionally distributed. This is what we see as the future to become. We will build an ecosystem of services to enable platform economy, and we can make this work the way the platform economy should work. Thank you. This is my time. Happy to talk in the booth further on.
Awesome. Thank you so much, Hedy. And next we will have David of Kuru. All right, here we go, David.
Hello, how's it going, everyone? I'm David Potter, the CEO and co-founder of Kuru, a solution that enables you to fund more loans. And before we go into things, I just want to give a quick background to myself and how I ended up building a passion and the solution of Kuru. But while in university, I was studying on a full ride scholarship from Bill Gates. But when applying for off-campus housing, which the scholarship would have covered all of housing, school, etc., is I ended up being rejected, not because I couldn't afford to make the payments, but only because I didn't have an established credit score. As I began to look and ask around, I noticed that I wasn't the only one facing this problem. As a matter of fact, there were many other students, families, adults that were also struggling with credit. This could have been because they were immigrants and coming from a different country and therefore starting from credit zero, or because of other socioeconomic reasons. After facing this problem, I learned more about credit and began building up a passion in credit and financial services. This led to ultimately speaking and working with over hundreds of banks and discovering a huge and clear problem. Overall, lenders were rejecting a majority of their applicants. Typically, about 40 to 90% of all applicants applying for consumer lending products end up getting rejected. For the consumer, this is a poor experience and a dead end. The way that society treats this is usually, sorry, you're a deadbeat or we can't help you, go look somewhere else. This ends up leading towards predatory lending, a bad experience, and just not a proper solution. For the lender, this is overall a leaky funnel and a leaky bucket. You have, hundreds, thousands, or millions of applicants coming through your funnel looking for a mortgage, a personal loan, a credit card. But because of the screening criteria, et cetera, the current experience is they end up being let down. It's lost opportunity and lost dollars spent on customer acquisition. We end up seeing lenders ask themselves, what can they do to grow new accounts without increasing risk? And also, how can they further help their customers? And with this, we have Kuru. In the traditional application experience when applying for consumer lending, an applicant will go through that application, and at the end of it, they usually reach that disheartening dead end of, sorry, we can't help you. With Kuru, we transform this experience into opportunity. Rather than that being a turn down, we turn it into a not yet. The consumer is seeing language such as, congratulations, you are pre-qualified for a personalized action plan. With getting started, we're linking with their bank data as well as their credit score and credit report data. Our system is personalizing an action plan in real time. And then once we're screening the end user, the applicant for eligibility, we're then notifying them through the platform as well as through email to go ahead and close out or finish the application. Overall, this is a better user journey for the applicant and more loans and deposits for our lending partners. For the end user, when we think about consumer financial health, this enables them to learn more about credit, build their credit scores, access credit, and overall give them a path to approval or a path to better financial health. Breaking that down a little bit into the user journey or user experience, is this is a white label solution. So all of the branding, et cetera, is behind your user experience, embedded into your experience, and follows that brand loyalty. Again, as I mentioned at the beginning, rather than this being a turn down screen, you're seeing an opportunity to continue that experience and receive that personalized action plan. At this point, we are linking, as I mentioned, with credit score data, credit report data, bank data, and some of our internal analytics. We then enable them to see their credit score and credit report, and this prevents them from offboarding to, say, a site like Credit Karma or Credit Sesame, where they lose that loyalty. We then personalize financial literacy. So rather than them just seeing stock financial literacy, this is all personalized to where they stand and what they can do to better help each of these factors. Someone in better financial standing is going to see different language here than someone who's more in the red. Then we have the personalized action plan. This is all updated in real time. So if they make a new spend on their credit card or on one of their balances, we're adjusting the action plan. This action plan has a robust set of actions. So whether it's unfreezing a credit report, paying off debt, including reporting rent payments, it's a pretty strong and robust action plan that overall leads to effective results. And overall, this allows them to access lines of credit that they otherwise wouldn't have been able to access. So once they build up either that first line of credit or reach their goal, at that point, they're then being targeted to reapply and close out.
1 minute left.
For our lenders, we share consumer data on all this and trends. And once an applicant is eligible, being screened for eligibility, we're also notifying our partners for them to close loop on their side as well. And overall, the results have been tremendous. So we see a large credit score increase of about 40 points within 3 months, 20% of end users reaching new eligibility, and 10% being eligible for reapplying and being approved. So say if there's a million monthly applicants, that's 100,000 new applicants converted each month. And work with a variety of partners across all lending verticals, including LendKey, Acorn Finance, Q2. We've also raised 3.6 million in funding with investors, including FIS, Holt Financial, Western Union, and more. With that being said, look forward to speaking with you guys afterwards in the exhibition booth. Thank you.
Awesome. Thank you so much, David. Wonderful. Next we have Cachet of Line, a public benefit corporation.
Thanks, Mona.
Awesome. Take it away.
Good morning, everyone. My name is Akshay. I'm the founder and CEO of Line. Line is a public benefit corporation that delivers subscription-based cash now, pay later service. Over 100 million Americans have income less than expenses today, and they don't have money for essential expenses over 10 times per year. And to bridge that gap, they need repeat access to credit, but lack that access. And this is because current solutions do not work. They either require you to have favorable credit. They don't approve people who have varying income, which is majority of this population. If you are a good actor, they don't give you an opportunity to level up or give you extensions. Or the solution is isolated to a specific employer, so it's not portable from job to job. Or in the majority of cases, the interest is high, there are fees, or there are gimmicks like tips that is confusing for the working professional. And finally, almost all of these solutions are single use when the need actually is for repeat access. Line solution is pretty simple. You download the app, link your primary bank account, you see the plans that you qualify for, subscribe, get cash instantly, any day, anytime. It's not pegged to your payday, and then you auto pay over a period of time. There is no interest. There are no credit checks. Varying income is totally okay. It's portable from job to job. It's unlimited refill and reuse, and you have infinite level ups. Think of it as FICO plus credit card rolled into one for majority of the population that has unfavorable credit or do not have a credit file. In fact, 60% of Line's users do not have a credit file today. This is a real Line user. Joe is a construction worker in Long Island, New York, earns $480 per week, which is varying. His studio rent alone is $1,800, which he splits with his girlfriend. When she's out of or in between jobs, he needs additional cash. Most solutions do not qualify him, but Line was able to qualify him. So he could take $30, fill gas, and based on a lead that he received on a weekend, could go work, make $300 thanks to those $30, pay off without being delinquent on his bills, and pay Line back. This is a typical user profile that we see. Our median age of our users is about 33 years of age. Most users are between 22 and 37, and they're located in 5,200 of the 33,000 US cities. Our product has been doing pretty well because of its simplicity and because of the ability to receive funds in multitude of ways, including store credits instantly onto your debit card or into your bank account. The secret sauce is simple here. We are a seasoned fintech team. We built it based on first principles. We are community members ourselves. I myself grew up in poverty. My parents came from extreme poverty. My dad got electricity. His village got electricity in 1997. And so, being a member of the community, I had felt that solutions were not being built from a customer's point of view, and so that's exactly what we did. We have a proprietary risk engine, but for this segment, that's just half of the problem. So we also built a proprietary collection CRM and collections team that is empathetic to the user and is allowing us to help these folks get credit and then pay it off on time. We also built a purpose-built in-house customer support team that works 24/7 in an extremely cost-effective way because our customers work night shifts, red-eye shifts, and so on, and they would need support at any given point of time, on weekends included, and that's exactly what we did. The the secret ingredient is we are connected to all the banks in these 5,200 cities, all the payroll providers. We're connected to all the gig platforms, and we're connected to all the bureaus, fraud, risk, AML networks. And we are connected to the pipes to push funds in any which way this user needs it, and ACH, real-time payments, checks, through the card networks, or through retailers and pharmacies. Like I mentioned, we are a seasoned fintech team. Prior to this, I headed research labs for PayPal, have over 75 consumer fintech patents. In the last leg of my journey was replatforming PayPal for the underbanked and underserved, which is when I realized that even though the intentions were good, incumbents as well as new innovators were building solutions mostly from a product engineering or business standpoint. Nobody was building it from a consumer standpoint, akin to what Phil Knight and Bill Bauman did at Nike.
1 minute.
And so we, left PayPal, spent over a year with the community as an Uber and Lyft driver myself. I've done about 36,000 miles. And with the data that I collected and my experience seeded what became Line, I was able to bring these great individuals onto the team and exceed. We've been doing pretty well. We came out of stealth this July, and since then revenue has gone up 12x. Number of paying customers has gone up 7x. Our revenue stream is mostly monthly app subscription and few other fees. Users take more than one line per month and return it within the same month. All of our traffic has been organic. We built something called Line Studio that grows, that's been growing 60% month on month. We get about 3 million impressions, and we're able to convert 0.2% into paying customers. The predicted lifetime is about 15 months. The cost total for us in those 15 months is about $40, and the lifetime value is about $120. The future is, people need additive capital to bridge the gap between income and expenses, and that's where Line operates as compared to others that you see on the screen. And one more thing, we have a commercial agreement signed with Western Union, so we are extending Line to about 60 million of their users. We have $18 million line of credit, and we haven't even raised our seed round yet. Yes, we are fundraising. In summary, we are an experienced consumer fintech team building a simple, scalable, responsible solution serving 100 million working Americans needing repeat access to quick cash. Thank you.
All right, awesome. Thank you so much, Akshay. Next, let me move Akshay 1 second. Next, we have Maurice of Simplify. Let me get Maurice up here. Awesome. Take it away. And let me make sure you're unmuted. Maurice, unmute yourself. There you go. Awesome.
Awesome. Thank you. My name is Maurice Wednesday. I'm the CEO and co-founder of Simplify. We're a UK-based fintech startup focused on enabling access to cross-border credit. So before I start my presentation, I'm going to start with a quick story. So I'm not only the founder of Simplify, I'm also a user of the product. On the screen here is a family member of mine in Nigeria named Michael. So earlier this year, Michael called and asked me to send him $75 to help him fix his car in Nigeria. Now, instead of sending him that $75, I used Simplify to help him access his first ever loan from a bank in Nigeria within 24 hours. Michael paid off that first loan within 1 month. He got a second loan, paid that off on time. And now he's starting to understand the value of credit. And he's now secured his third loan from that same bank to help him grow his small business. Now, I could have easily just sent him that $75 when he initially asked for it. But instead, with Simplify, I've put him in a position where he may never need to ask for money ever again. And that's the transformational opportunity that we're unlocking with Simplify. Now, in developing countries, about 1.7 billion people, just like Michael, struggle to access basic credit products. And as a result, whenever they're short on cash, they have no choice but to depend on their family members living abroad to constantly send them money to fill their cash needs. Now, the problem with this model is that for the millions of immigrants in Europe and the US that are constantly sending money, like my Nigerian American family, this constant financial drain on their limited finances keeps them in poor financial health. And their family members back home who are now dependent on that money continue to be excluded from formal financial services and remain in poor financial health themselves. And this problem persists because everyone in the remittance market is focused on trying to help my mother in the US send money back to Nigeria cheaper instead of solving her underlying problem, which is eliminating the need for her to send money by solving the access to credit problem. And we are the first to solve this massive problem at Simplify. So what we do at Simplify is that we enable people like my mother to help her loved ones back home instantly access affordable credit instead of sending money. And we help her do that in a process that's actually simpler than sending money. So how it works is that the money my mother would normally send, she tops it up in her simplified digital wallet. She agrees for us to hold it in her wallet, and it then becomes collateral that her family members back in Nigeria can use to instantly access low interest loans from our bank partners in Nigeria anytime they need cash. And the money that's held in her simplified wallet, we pay her a little bit of interest on it. So there's no cross-border transfers, and she actually makes money from helping her family members access formal credit on their own. And when they're done repaying, we instantly release the money in her wallet back to her. She can keep it in the wallet, or she can easily transfer it back to her bank account for free. So there's no money sent. She gets to keep her money. She earns cash back instead of paying costly transaction fees. And she empowers her loved ones to start accessing money on their own and build valuable credit history so she can focus on improving her own financial well-being. So our product is more than just enabling access to a loan. Our customers are using Simplify to enable their family members back home to get continuous access to cash for productive uses. So by just depositing one collateral on their Simplify wallet, their family members basically get a revolving line of credit. And as long as they keep repaying that loan, anytime they need cash, they can just go to the bank and access a loan instead of asking to send money. So we're in the very beginning stages of building the first ever retail cross-border credit platform for immigrants across the world. We started by helping their family members access credit, and now we're also helping our immigrant users access credit for themselves back in their home country for their personal and business activities back home. And with a focused mission on helping this 270 million plus customer base instantly access and seamlessly access credit in the places they need it most, so they can improve their financial well-being and build financial wealth and help their communities back home do the same. So where we are today, we completed a successful proof of concept pilot in the UK to Nigeria corridor.
1 minute.
We recently released our mobile app in Europe and are averaging about 250 weekly downloads. We're now up to 6 lending partners in Nigeria. We're expanding to Senegal this month in partnership with the United Nations, and we're preparing to launch our mobile app in the US Q1 of next year. The Simplified team, my co-founder and I, we worked together for 4 years building banks across Africa and China with a focus on financial inclusion. And we were able to secure as a vested advisory board member, the former CEO of Western Union UK. Thank you very much, and I'll be available for questions afterwards.
Awesome. Thank you so much, Maurice. And next, our last presenter is Nate of Challenger. Awesome. Take it away, Nate.
Thank you. Have you ever wondered why every employee doesn't take advantage of their employer's generous 401k matching program? After all, it's free money. It comes down to each employee's financial priorities. 37% of Americans cannot afford a $400 emergency. Almost 70% of Americans cannot afford a $1,000 emergency. Whether it's a car breaking down, a needed home repair, or a family emergency, the reality is that unexpected expenses happen. Everyone is talking about the Great Resignation. There are many factors that lead to an employee leaving a role, but one major reason why employees leave has to do with their personal finances. According to over a decade's worth of research by PwC, financial matters are the top cause of stress for employees, who will often leave their job for a 50-cent raise or $1,000 signing bonus. When companies can't keep their employees, they can't grow. An effective solution is hiding in plain sight, but requires us to address the dissonance between the employee benefits that are offered and what employees say they need. PwC asked employees, what is your top financial concern? Millennial and Gen X employees responded by far that their top financial concern was not having enough emergency savings for unexpected expenses. This isn't just the case for some theoretical organization. This is the case for your organization. Our goal is to help 1 million Americans save $1,000 in the next 5 years and make the emergency savings account as ubiquitous as the 401k. I'm Nate Grundeman, the CEO at Challenger Finance. Challenger is a bank account that helps employees save for what's important now. With Challenger, employees save for short-term goals, like an emergency fund, a down payment, or a much-needed vacation. Employees call us the 401k of today because money is deducted automatically from their paycheck and deposited in this account, but they can access their money whenever they need it without paperwork or penalties. Employers want to encourage short-term savings because employees with money set aside are less likely to leave the company for a small raise or $1,000 signing bonus. And to drive the incentive, our employer partners are offering their employees a match as they save. And the product works. The average employee is saving $1,532 per year with Challenger. Sarah is a compliance analyst at Western Union and is saving for her growing family. Ismail is a supervisor at JL Audio and has referred 6 coworkers already. Allie is a manager at VMP. She's saving to buy her first house with her partner. And employers love us because their employees love us. So far, we've seen strong program ROI. Retention rates are 26% higher for employees who use Challenger. Bobby, the CFO at JL Audio, a 650 employee manufacturing company in Florida, said this about Challenger. If we can give a set of our employees some financial stability, I'm certain that they'll be more productive in the workplace. And we're growing fast. We're growing revenue almost 50% month over month. Our employer partners span industries from manufacturing, supply chain, hospitality, healthcare, and financial services. Our partners have one thing in common. Their employees are low to middle income and aren't thinking about long-term goals yet. It's clear that these employees have felt left out of their company's benefit offerings so far. Challenger has been able to help employers turn this story around. We've been so successful because we know our customers. We've surveyed and interviewed over 15,000 people, and we've built the account that employees are asking for from their employer. Employees want control and flexibility over their finances. Employees want access whenever they need their money. Employees want predictability, that they won't be charged an unexpected fee, and expectations around how long it will take to reach specific goals. Employees want safety through FDIC insurance. Employees want portability to take their account to their next employer without restrictions, hassle, or rollovers. Employees want privacy, knowing that their employer can't see their personal finances. And employees want ROI. Does this account offer a match to make it better for saving than other products in the market? My team and I are on a mission to transform the way employees achieve life's financial goals. I'm a 2-times mission-driven VC-backed fintech founder. My co-founder Gabe is a former banker and trader on Wall Street. My co-founder David has been building financial software for his entire career, managing over $2 billion in AUM. Together, we're inspired to help America's workforce build an abundant financial life. We're in the middle of a national savings crisis. 70% of Americans cannot afford a $1,000 emergency. This is a financial inclusion opportunity. Our most popular employer-sponsored financial products, focusing on retirement and healthcare, only help people who are able to prioritize their long-term financial future. It's time that we work together to provide solutions that meet the needs of our essential workforce. If you're passionate about this problem or want to compare notes, you can meet me in the Challenger Hop-In Expo booth right after this, or email me at nate@getchallenger.com. Thank you so much.
Awesome. Thank you so much, Nate. Thank you, everyone, for joining us on this stage. And thank you to all of our founders, Kevin, Nick, Hetty, David, Akshay, Maurice, and Nate. Everybody, please return back to the main stage. You'll be able to access that from the bottom in the little blue icon that says return. And then we will have the opportunity to engage with these founders in their expo booths. So long.